Hi, and welcome to this week's Symax Fintech Market Insights. As usual, broken down into four parts. Part one, we look back at last week, just the highlights. Part two, we look forward to what's going on this coming week. Part three is my macro outlook, and part four is where I do some chart analysis on a variety of asset classes. So I hope you'll stay with us through all of it. Just start with our disclaimer. So trading involves potential risk of loss of capital and is not suitable for everyone, but hopefully it is for you. Many companies provide leverage, so just be aware you can lose substantially more than that initial investment. The views, everything enclosed and carried into anything that we do is just purely for educational purposes. You know, we're not trying to encourage you to trade or invest. That must be your decision. And before you make that decision, carefully consider the risks involved, your financial situation, definitely your level of experience and risk appetite. And of course, only risk capital you're prepared, but more importantly, you can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital. That's so important. I have so many people come to me and want to do courses with me to learn how to trade, but they've already lost money. Ideally, people come to me before they even try trading, and then I can help them do it in the right manner. Okay, so we're going to start off with looking at the highlights of last week. So there was lots of central bank speakers last week. Again, sort of providing mixed views on inflation. Some of it depended on which country they was in. Others, even within the Fed, there's sort of mixed expectations moving forward of what's going to happen with not just rates but also inflation. And of course, inflation is going in the right direction, just not fast enough. For many, or for most, I should say, any further rate hikes, I'm talking about central banks now, they will be data driven. So, okay, let's have a look at what happened last week with the data. So, in the US, consumer credit was much higher than expected. It came in at 17.85 billion. Now, the expectations was only 13 billion. So again, it just goes to show that, more consumers on that sort of low to middle income, they've exhausted any savings that they did have. And now, of course, they're having to use credit to finance their monthly exits. CPI was pretty much in line, which I suppose was a pleasant surprise for the Fed, possibly for the consumer as well. So CPI came in at 0.2% month on month, which is 3.2% year on year. The core was the same, 0.2% month on month, which gave 4.7% year on year. And you've got to remember, sort of the core excludes food and energy. Then on to PPI, that came in at 0.3% month on month, which is 0.8% year on year. And the core was again 0.3% month on month, which is 2.4% year on year. Now, when it comes to jobless claims, the initial jobless claims were much higher than the consensus. They came in at 248,000. I have been warning about this for a while, that we should start to see some job losses. So, sometimes the data gets a bit skewed by seasonality and things like that. And then Michigan consumer sentiment came in at 71.21. Moving on to Europe, they only had investor confidence come out, but that was better than expected at negative 18.9. In Germany, industrial production was much lower than the consensus. It was negative 1.5% when expectations was only negative 0.4%. but CPI came in line, harmonised at 6.5 year on year. So Germans are still struggling. In the UK, house prices were down again 0.3% month on month. Retail sales came in stronger at 1.8%. And it just goes to show that there's a bit of resilience going on in the UK at the moment. Production again was higher, 1.8% month on month, when the expectations were just 0.1%. And on the manufacturing, it was 2.4% month on month, when the expectations was 0.2%. So much higher there, much stronger. Then moving on to China. Again, it just sort of highlights the manufacturing issues that are going on in most countries at the moment. Chinese exports were lower, some 14.5% year on year. And even imports were down quite a lot, down 12.4%, when the expectations there was only 5% down. In the Swiss, unemployment increased. It's higher now at 2.1%. Still very low though, of course. In Japan, earnings came in at 2.3% year on year. It was expected about 1.6. PPI came in at 0.1% month on month and 3.6% year on year. Moving on to India, I just want to mention that food prices are increasing there, and there is a good chance that you could see sort of inflation go above 8%, which is of course outside the expectations and desires of the central bank. And just to sort of as an example, tomatoes were up 200%. That's just because they've got a few problems with their climate at the moment. The weather's been a bit crazy. In New Zealand, PMI was lower at 46.3%. Now, overall, last week there was a big spike in gas prices, and that was due to a potential strike in Australia. So that really pushed prices up. At one stage, I think they was up about 30%. They did ease off a little bit towards the end of the week. And oil, WTI, hit $84. So oil is moving up a little bit at the moment. It's definitely got a stronger undertone to it than what it has had for the past few months or so, really. So anyway, that sort of just covers the highlights of last week. Now we're going to move on and look at what's going to come out this coming week. But of course, before we do that, we're just going to point out some of the services that we provide. So apart from these YouTubes, we offer a free daily newsletter. That gives you gives you all the global news, really, all the important global news, I would say. I filter it every morning, so I just focus on what's going to impact markets now or in the future. So you get the headlines, you get my views, and you get global news, and it's all for nothing. And there's the link if you want to sign up for it. And then one-day workshops. So again, if you're considering trading, it's a great way to find out if it could be for you, or maybe you want it as a second income. Or of course, maybe you're already trading, but you've got a few little gaps or certain areas that you would like to improve on. Then I can certainly help you with that as well. And then on top of that, we do 1 week courses. You'll feel confident and competent after just 1 week. Is it going to make you a trader? No, but it's going to give you those solid foundations to build on. And that's the important thing. Start the right way. And if you've got that inner trader inside you, in a week, I can help you to discover it. Now, one of our 1 week courses also includes a free trading challenge. Which means that if you can pass the challenge, you will qualify for a funded trading account. which removes any need for you to use your hard-earned money, savings, or anything like that. And then if if you've really made your mind up that you want to become a professional trader, then our comprehensive accredited masterclass has been designed exactly for that. We're going to provide you with all the fundamental knowledge and trading tools that you're going to need to navigate any market and in any conditions, and also on any asset class. Moving on, trader mentoring. Maybe you just don't want to do a course, maybe you just need a little bit of help in one specific little area, maybe even just advice. I'm happy to do that. We provide trader mentoring by the hour, by the day, or even on a monthly subscription. We consult to companies, so help them with their FX and commodity exposure. We create sort of very flexible but robust hedging for them, so it protects them either way. And of course, we provide trader education to individuals, exchanges, brokers. This content is invaluable. It really sort of helps people. Not just what we provide, but just in general. This type of content is really helpful to prevent a lot of guys coming into the industry making a lot of those early mistakes. And as I mentioned earlier, we do offer a couple of accounts with a couple of courses that include this funded trading account. As I mentioned, one is the 1 week course. Another one is our Flexi Masterclass, where you get 4 weeks of guided learning, but you've got a year to take those 4 weeks. In between, you can practice as much as you like. And because we run this course regularly, it just means that you just pop back to fill in and do the next week or the next couple of weeks each time until you've completed the course. And then when you feel ready, not even do you have to take that challenge straight away. When you feel ready, that's when you can take the challenge. If you've got any questions on any of this, then please contact us. It's the usual, info@symaxfintech.com, or anything that you'd like to ask me personally, it's chris.tubby@symax-int.com, and we hope to hear from you.